Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Joe Tigay, Managing Partner at Equity Armor Investments, to discuss action in the Nasdaq-100 and VOLQ, the Volatility Index that directly tracks the Nasdaq-100, as well as a fund that takes advantage of the up and down movements in the index. Joe, it's great to see you. Welcome back to Trade Talks.
Thanks for having me.
All right, and certainly some volatility within the Nasdaq-100 over the past week or two. What are you looking at?
Yeah, it's very fascinating. Today is a little bit different. The past week, or this all week, we've been watching the Nasdaq. The Nasdaq has dipped below the 50-day moving average, only to recover throughout the day and close above it. Now, today we're actually not seeing that recovery intraday. We're actually seeing some increased selling pressure, and that could cascade if the Nasdaq does close below the 50-day moving average. There could be some selling that gets piled on after the fact.
Any clues you're getting from VOLQ, the Volatility Index that tracks the Nasdaq-100?
Yeah, that is again on the rise, although it's not quite rising as much as you would expect, given the increase in volatility, or the decrease in the market. Usually, you would see a little bit larger rise out of volatility. However, volatility has been running above the implied volatility has been running above the realized volatility. So some of this move has been priced in by the market already. Yet we still are seeing an increase in the VOLQ. That actually is now above its 200-day moving average, and we are seeing it on the rise and certainly threatening to take out some new levels. If the Nasdaq does make a new lower low, we probably will see a steady increase in volatility.
And let's talk about EAVOL and how that fund is responding to the volatility that we're seeing in the market now.
Yeah, thanks a lot. Yeah, the EAVOL Nasdaq-100 Volatility Hedge Fund. Now that is a fund that is an insurance to the Nasdaq. It owns the Nasdaq. It owns volatility as an insurance. There's a lot of other tail risk funds out there. Some of them will use technical indicators like the 50-day moving average and sell if it's below there. That's kind of a defensive strategy. And I don't necessarily think there's a right way or wrong way. Our way is more aggressive. We're taking advantage of the moves in the volatility. So we're using the volatility on a day like today. We're collecting our insurance and we're putting it back into the market. And if the market is to recover in the future, we're going to sell that back out and buy more volatility. So we're more an aggressive strategy. Technical indicators would be more defensive.
All right, Joe, appreciate the update. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.